Hello, everyone. My name is Jeff Coga. First and foremost, I would like to welcome you and thank you so much for being here today. Now, before we get started, I want to do a quick sound and audio check to see if you can actually hear my voice, as well as do you see the mouse move right on the screen here? Because we have a very interesting training that I'm going to be holding today because of where we're currently at in the year right now. So I want to at least talk about this because I've had people ask me all the time, hey, what are some of the other ways that you can actually benefit from not actually working more, but actually making more? And all has to do with I call it your alternative life and identity, okay? But let me go and pull up the chat box here. So again, if you can hear me, please type in the chat box, yes, Jeff, I can hear you, so we can get down and dirty in this. All right, so Dustin said, good from San Diego. Yes, Ben. Said, I can hear you. A good friend Julie said, yes, I can. All right, great. So sounds like you guys and gals can hear me. Now, what I want to do, again, is give you a quick disclaimer on this, all right, because we're going to be talking about some pretty high-level stuff here. So, again, I'm going to read this to you so that way I don't get in trouble. So Jeff Coga is not an accountant, attorney, or financial planner. Any advice given on this training should be considered entertainment purposes only. Many of the stories told by Jeff Coga today was completed by a licensed professional, and you should seek professional advice. Do not take any of the advice as professional advice. Today's story is a simple story of entertainment purposes. Do not follow any of the advice, smiley face, and please note there is no assurance that the examples of past earnings, deduction, etc. can be duplicated in the future. We cannot guarantee your future results and or success, and there are some unknown risks in business, and we cannot foresee which can reduce results. We are not responsible for your action, and the use of our information, product, and services should be based on your due diligence, and you agree that our company is not liable for any of the success or failures of your business that is directly or indirectly related to the purchase and use of the information of the products and services you're getting today. And if you do not agree, please leave this training right now. Okay, so if you are still here, it probably means that you agree to that. Hopefully so. Now, I'm going to be covering a lot of something that has to do with this particular quote, and why I'm doing this, okay, is that in this world, nothing can be said to be certain except what? Death and taxes. And this is from good friend Benjamin Franklin. And if anyone knows any history about the United States, you might actually know that, hey, Benjamin Franklin was supposedly supposed to be one of the candidates for the first president of the United States. He just says, I can't, okay? As well as a funny, interesting story is that he was proposing to actually have, instead of the eagle, he wanted to use a turkey, which is a little funny Snapple fact there, okay? So, again, we're going to be talking about not death, but we're going to be talking a lot about taxes, all right? And here's another one, another gentleman. If you have never read his biography, highly recommend for you to read his stuff. Good friend Albert Einstein, one of the smartest men, and he says the hardest thing in the world to understand is the income tax. So one of the smartest men in the world, all right, said the hardest thing to understand is income tax. All right, so I decided to do this because depending on where you're currently at in your business, all right, the strategy is going to vary, but you gotta understand this, all right, especially if you're in the growth phase of your business where the income's coming in and you're trying to expand, all right, you gotta understand this because, again, trust me, a couple of moves, a couple of chess moves that you make on this game called, hey, growing your business, you can find out how quickly you can actually hold on to more money. Now, if you're just starting off and you have no revenue coming in, all right, which I don't think majority of you guys and gals should be in that position if you're on this training, but if you are, understand this because once it starts coming in, again, it's a matter of what you keep, not what you let go, okay? So, and understand where you're at, obviously, in the market cycle, too. So, okay? So another quote is, if you guys know who Notorious B.I.G. is, okay, he says, it's like the more money we come across, the more problems we see, and it's very true. Right? The more money you make, the more money that you put aside, you get more responsibilities because you have to pay attention to your soldiers on what they're doing. Are they actually making more money for you? Are they being invested wisely? Or is it going to our favorite uncle, our silent partner, Uncle Sam, and not coming back to us? Okay, so again, you got to know these type of stuff, and again, I'm putting this in here as a training because before we get into any of like the lead generation, what works, what doesn't work, what's working now, is that I've come to realize if you're having challenges understanding this, you're going to have a lot more challenges understanding the lead generation game and the conversion game, because money is just going to be going out the other side. All right. So remember this. Okay. The CSV file is the raw data that all marketing platform is based off of. So remember, if you've gone through any of the training, I keep on telling, hey, database, 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 putting it on a database, all right? Because people ask, hey, what type of CRM or marketing tool should I use? And I said, hey, look, do you got a database? And if they don't have an Excel spreadsheet, in this case it's a CSV file, then it's really, really challenging to plug into any program, right? Because you haven't built that muscle of building your database. So again, in the world of marketing and lead generation and conversion, the raw file or the raw data is a CSV file. In the world of accounting, okay, the world of accounting, the world of taxes, it's QuickBooks. All right, you got to have that, because the 99% of all bookkeepers, CPAs, etc. in the world of accounting is going to use QuickBooks. So don't use like Excel spreadsheet and then keep track of that kind of stuff, because as your business starts expanding, ask me how I know this, is that if you're using that stuff, you're going to have to redo your whole books. All right? And it's going to cost you more time, money, and headache. And you'll start figuring out that you might have left a lot of money on the table, or you might have been giving a lot of money to Uncle Sam when you could have actually kept that for yourself. Okay? So any questions so far? Type in your question. Again, this is time for you guys and gals. Now, at the end of today's training, all right, I'm going to talk about how I cut my taxes, and this is a couple of years ago, okay, where I cut my taxes from 57. This is only the federal side, okay? This is not the state side. I'm in the beautiful state of California, so we pay tons in taxes here. But again, this is just the federal stuff, if you're wondering. How I cut my taxes from $57,929 to $33,594 and kept the difference. Right, I know it sounds kind of weird, but again, and this is, remember, after quarterly taxes, okay? Quarterly taxes for the folks that may know what that means, okay? So you're paying quarterly taxes, and at the end of the year, I find out, because I had an amazing year, that says, oh my gosh, I still have to pay money to this, okay? And by doing some couple strategic changes and listening to my mentors instead of physically at that time when I was a lot younger, guess what? I would hear them, but I wouldn't take action on it. And when this hit me, I said, holy guacamole, you know, this could have been a new person that I could have hired, and this could have been their salary. And this is where it really, really hit home for me. And I was like, man, I wish I did this a lot earlier. Okay, so it says great stuff. Yes, this is perfect timing. This is from Frank Kelly. Okay, perfect. So let's talk about this. All right. Now, a couple of things you can write down. If you don't, now, well, hold on. Who has a bookkeeper right now? Who uses bookkeeping? What do you guys currently do right now in your business? Let me know in the chat box. Do you have a CFO in your business? Do you have a bookkeeper? Do you do bookkeeping yourself? Do you use QuickBooks? What do you use? Let me know before I go in. Kelly said, well, who do you use? I use QuickBooks, and I have a virtual CFO that runs my business. And then I also have a CPA as well, and a CFP that I do quarterly reviews with. So, okay, Sam said, I do QuickBooks on my own. That's great. Kevin says, I use Excel. Please make sure to start using that. Dustin says, my CRM has expense and profit tracker. That's good. Okay, that's good. But once it starts going up, I'm telling you, you should put it on QuickBooks. Okay. Ben said one-stop shop Excel. That's good too. It's better than not having. Julie said Box. Okay. So, is QuickBooks. I'm telling you is because you can get a lot better, higher level, advice on that. Okay. Now, for the folks that said that I do not, okay, so you're probably just starting off, you can get a bookkeeper very, very cheap. This is where I started. For my investment company, we're doing over 7 figures on this, and we hired actual bookkeeper from overseas to handle that, because we were doing over 2,000 transactions a month because of construction material we're buying and selling. So we got bookkeepers from here and that ran our books. Okay, and we did this for a very long time until we brought it all in-house. Okay, so you can definitely use companies from here, from Upwork. This is formerly known as Odesk. Okay, and you can go to bookkeepers and you can see tons and tons of people who are really good. Again, do that. Now, Now, the next one is one of the ones that are getting very, very popular, especially for my millennial clients, right, the younger generation. They're starting to use like a company called Bench.co, where it's kind of like a virtual bookkeeper that's doing it, dedicated for your team. Now, I don't recommend them. Why? Is because they haven't been around for a long time. That's number one. And I don't know what's going to happen because if they go under. Okay, that's number two. And then the third one is that their platform that they use is not based on QuickBooks. So I don't like that. They use their own app. So again, if they go under, then guess what? Then do we have to retransfer all that stuff into QuickBooks for later on? Okay, so I like to use stuff that's been around for a long time, that's been proven to work. And again, you can use this as a temporary stuff, but I tell individuals, as your business grows, switch over and start using QuickBooks. Okay, highly recommend that. All right, so now let's talk about tax deductions. Okay, so I'm going to talk about 16 tax deduction in here and what I've learned, especially in the last several years, and what you'll find on the internet in terms of why I'm doing the things that I'm doing. All right, for the folks, our grizzled veterans in here, okay, I did a lot of video marketing in the space of real estate starting 2008. Where I'm in my car, I'm recording videos, I'm at my project sites, I'm at my house, I'm at my apartment. Right at that time when I lived at 1100 Wilshire in downtown, I would record videos there. And now there's a strategic reason on why I did that. And it's all because of certain deductions that I understood. And as if you're paying attention to what's happening in the space of digital marketing land, hopefully, okay, this will expand your mind and help you try to figure out other ways to be able to keep more of the money that you have earned by adding some of the stuff that you're doing already. I know it sounds weird, but we'll start talking about this, okay? Cool, so let's go into this. Okay, number one, commission paid. Very, very simple stuff, all right? Now, this is, again, for some of you guys, this is really basic stuff, but follow along, okay? For some of you guys might be like, oh, yeah, I might not be doing this, okay? So, which shouldn't be the case, but if you're not, please know, okay? So remember, commission paid by your business to other agents or employees and what work with or under you are generally fully deductible business expenses that no entrepreneur should overlook. Depending on your business structure, commission can quickly add up and end up being one of your largest deduction. So again, make sure you deduct that. So, for example, if Emilio owns a small real estate business where he specializes in flipping houses for homeowners who need instant cash, he contracted with 2 other real estate agents and agreed to pay them 5% commission on all sales. Last year, one of his contractors had $700,000 of sales and others $1 million. Emilio would deduct $85,000, which is 5% times the $700,000 plus the 5% of the $1 million of commission expenses, and this is going to be on the Schedule C. So, what I want you to really pay attention is if you're doing the deduction, make sure you get your the 1099 sent out, okay? 1099 sent out. Very simple stuff. Kelly says, I do this, great, okay? Again, I recommend bookkeepers to do that. Now, another one, and this is where we're going to start stacking, okay? Deduction number 2 is standard auto deduction. We drive a lot. Now, luckily enough, how my business is structured now, I don't drive as much as I used to. I used to literally drive sometimes 4 hours on the road looking at different project sites or going from different properties to different properties to different properties. But luckily enough, I don't drive as much. But what I started discovering is stuff like this, right? Standard auto deduction, which is if you use a vehicle for your business, you may be eligible to deduct your auto expense based on how many business miles you drove. In 2017, you can deduct 53 cents for each business miles driven. The standard miles deduction is available for self-employed individuals and drivers who use their car for hire or ride sharing like taxi, Lyft, or Uber. It's also available for individuals using their vehicle for job-related moves, charity, or medical purposes. And although these activities are deductible at different rates, if you want to take advantage of this deduction, you'll need to track your miles. And you should also know that there are a few circumstances that can prohibit you from deducting your miles. However, you maybe still be able to deduct your vehicle expense based on actual expense. So, for example, Patricia, Washington, D.C. real estate agent, for home realty drove 4,000 miles last year for his business, which can be deducted at a rate of $53.5 per mile, and Patricia could knock $2,140 off the taxable income by taking the mileage deduction depending on effective tax rate. All right, and that can be a significant amount. And the easiest way to do this, because all of this goes back to tracking, right? Just like in marketing, you hear me say this, right? What is your cost per lead? What is the lifetime value of your client? What is the time frame from initial contact to the lead to actually converting it, right? What is the time frame from contract to physically what? Commissions are closed, right? These are all tracking. So and the reason why I'm doing this training today is to help you guys and gals build that muscle even more, because my gut tells me if you're not, and this is kind of an observation, I could be wrong, is that if you're not tracking your cost per lead and your marketing budget, the chances are you're probably sloppy on the tax side too, which means that you're probably not tracking your mileage. All right. Let me know if that's the case. If you're a unicorn and that's not you, let me know as well. Okay. Just an observation I see. Okay. I'm not trying to point fingers. I'm not trying to say anything bad or negative. It's just an observation of talking to so much people in the space of real estate. Is that's what I've come to realize. Right? They're doing a decent job, maybe tracking kind of on a superficial, higher level stuff, right? Of little deduction here and there, but they're not really anal about it. They're not really keeping track to the T, and they're always constantly scrambling at the end of the year to meet with their accountant on what they're doing. All right? Let me know if that's the case or not. All right? Kelly said, nailed it. I don't know if that nailed it means on which side I nailed it on, but please let me know as well. All right, so now let's talk about something interesting, all right, on this. Standard auto deduction, okay, is that commuting does not count. So meaning if you're driving into the office, it does not count. Okay, and when it comes to tracking, you need paperwork, aka a logbook. So the way to do this is you can get the app on like QuickBooks and it will track your miles for you. You can do that. Okay, now I have a logo on here of YouTube, and there's a reason why. All right, because remember I said commuting does not count. So if you're driving into the office, it doesn't count. So what did I start doing? Now, for the folks who have been following me a long time, I started doing kind of what I like to call car vlogs, where I'm inside my car as I'm driving, and I'm literally creating a video. I'm talking about the real estate market. I'm talking about real estate marketing. I'm just ranting, all right, or something that just happened in the business or whatever it is, okay? Now, the reason why I started doing this, okay, and the reason why I started doing the video is because when I hired a new CPA who came from a referral from one of the biggest YouTubers, all right, in the space of comedy, right, especially in the Asian community, he's one of the they're one of the biggest, okay? And then as I started talking to them, they told me that basically they said, yeah, this is the reason why people on YouTube do these, where they're in their car and they're driving around, and guess what? They're recording a video. Because now they can expense that off as not as a standard auto deduction, but a deduction of marketing deduction as a literally what? Using it as kind of a space for videos, okay? Kind of a stage that you're doing, right? Like an actor and actresses go to a place for, guess what? Shooting movies, right? And they can deduct off that. So that's what he explained to me, and that's why I started doing it. And so that's why there's so much videos that I do. And many of these videos that I do is literally me commuting to the office or what? Going home. Because legally, I cannot what? Deduct that from my standard auto deduction. Hope that makes sense. Right? Little tweaks that you're doing. Same thing as if you might see like some YouTube people where they're like family YouTube channel, right? They see their kids in there and they're going grocery shopping and it's all, and they're deducting all that stuff. All right? Something to think about. All right? Something to think about. Okay, now, again, here's the example, right, I just talked about, right, so YouTube, and the simple one that before we used to do, like, record stuff, edit, and we used to launch it, but then I went really simple now, where I literally do Facebook Live now, as I'm, like, driving home, or I'm actually driving into the office. So here's a video I made where I talked about how to make an additional $100,000, not too long ago. Okay, and it's simple. I just have it, boom, hit the record button, it records, it timestamps it, and it's on my Facebook page. Cool. Right? So if anything happens, I get audited or whatever, I'd be like, look, no, this is for marketing purposes. It's on my business page. It's on my business page, and I'm, guess what? Using it to educate my community. Right? You can do the exact same thing. All right. Now let's talk about some other stuff, okay? Deduction number 3. So any questions on that before I get into that? Ben said, cool. All right. Dustin said, what about setting a home office or going to the business office? I'll talk about that, Dustin, in a little bit, because there's a strategy behind that I've started applying as well. And it all has to do with understanding kind of using the power of social media too, like YouTube with the driving the car and stuff like that, right? So we'll talk about heavily on that. Cool. Legal and professional services. So a real estate agent can deduct legal and professional fees to an extent that they are ordinary part and necessary to operation. Legal and professional services is a broad category that generally includes expenses for your lawyer, accountant, and any other professional consultant agents may hire. All right? Professional. So again, you hire an accountant, it's worth every dollar. Right? A lawyer that helps you out, worth every dollar too. Now, example, and this is a simplified method, okay, is Frederick, a real estate agent, recently listed a property for a longtime client that was in terrible condition. He spent $15,000 of his own money on professional fees charged by an engineer, architect, and designer he hired to help him bring the new listing to market. Fred thought it was a smart business decision because it was a longtime client and his commission was going to be substantially more as he prepares his Schedule C. All of these costs could be deducted by business expense. Now, clearly, if you're just starting off or if you do not have reserves, you're not going to be able to do this, right? But I tell individuals all the time is that if you have, okay, if you have some reserves, and this is why I'm so huge on having reserves in your business, is to pay for services on behalf of the seller. That's what I tell people. If you have the ability. I've done that as an investor, all right? My team, agents have done that. Clients have done that. Now, you might be like, why would you do that? That's way too risky. Now, if it's way too risky and you can't do it, then with all I mean, probably the contract that you get with that seller is probably not solid and or you don't really believe that the seller is a good person. Right? Because what I've come to realize is that if people are good people, all right, and you have a strong bond and relationship for it, and they somehow need money to be fronted because of whatever reason it might be, financial thing, or because you're doing it as an added service, right, so you can get the contract, okay, then it's a way for you to stick out. Like I've done stuff as an investor where I've paid for moving expenses up front many times, thousands of dollars, right? I'll pay it out of my pocket to get a truck, to get some boxes, get some tapes, right, and then hire people to do it for them. Even I've done it where storage space too, where I've prepaid storage space where people needed to move. I'll prepay it for 6 months, maybe sometimes a year. Right, to make life easier, and all that stuff can be deducted versus just focusing on, hey, I got a contract, let me go and sell this and then make money. Because when you start doing that kind of stuff and start adding it, right, it starts dovetailing in your business. Starts dovetailing. All right, now I'm not saying, and Kelly said, are you saying you should do this without a contract? No, I did not say that. I don't think I said that, okay? I'm not saying that. Even good neighbors, right, even neighbors that are, even great neighbors need a fence, okay? So yes, you're going to have a contract, all right? Do not do stuff like that without a contract, all right? And highly, when I do these types of stuff, I always get a memorandum signed off by the seller, especially if it's a seller, and then I have that memorandum notarized. All right. Now, the reason why I do that is because if something were to happen, okay, it hasn't happened to me, something were to happen, I have the ability to record that memorandum against the property, letting people know that, hey, there's an outstanding debt that I've fronted. But again, it's a lot easier because the ROI on that is going to be much higher than if I were to ever get from a money market account or a CD or something like that. Okay. So I hope that makes sense. All right, so now let's talk about another huge one where I can always tell if an individual how much they're making based on this right here, which is advertising expense. Advertising expense. And then the IRS allows you to deduct reasonable advertising expense that are directly related to your business activity. The deduction for the advertising expense is broad and can include number of expenses. So Gail, a real estate agent, deducts as advertising expense all of her sell-side marketing expenses, including staging, brochures, placement, photography costs, and open houses. Kind of like, duh, Jeff, yeah, that's kind of basic stuff, all right? But let me start talking about why this ties into business growth, why this ties into lead generation, why this ties into how quickly you can actually grow your business with velocity, all right, is this, okay? I spend a lot of money and my clients spend a lot of money on online advertisement, okay? And as well as we do offline stuff as well. But what we leverage doing this is we use a credit card, all right? We don't ever pay online advertisement with cash. Why is that? Because we want to earn points, all right? We want to earn points. So we do this, so on Facebook ads, Google ads, run it through credit card, earn your points, okay? Get your little points on there and your reward points, and those things can add up so you can use that for when you want to go on vacation. You can go on vacation for free, other business trips you can go on without paying for anything, all right? And you can get really, really smart doing this, and I'll talk about it in a little bit on a different deduction, which is another higher level deduction that you can do based on understanding this. Okay, now another way to do this, if you're saying, okay, I don't really need points, to leverage off of this is using credit card balance transfers at 0%. Take that out, all right? Take that 1 year worth of 0%, take it out, no pay any interest, stick it in a checking account, and use that for marketing, all right? And I'm talking about marketing as in spending it for marketing dollars, not like products or services you buy, okay? Like I'm talking about like, hey, you use it for advertisement, ads, all right? And here's the magical number. Actually, you know what? Let me ask this. Based on your income for the last 12 months, or maybe it can be the last 6 months, okay, or even last year, whatever number that's easy to do, okay, what percentage of your business did advertisement cover? What percent? Let me know in the chat box. Let me know. Or do you even know that number? Let me know. Type it in, please. And when I say advertisement expense, I'm talking about advertising and actually using it for lead generation, not products or services that is supposed to get you leads. I'm talking about like direct mail. I'm talking about like, hey, did you do some postcards? Did you do some flyers? Did you do some online ads, right? I'm talking about those direct things. Did you do a media buy? Did you actually set up a booth somewhere else at a local farmer's market, right? If you did open houses, right? Did you do hire door knockers? Did you do whatever it is? I'm talking about those exact numbers. All right? Not the products or services. Dustin said 40, Ben said 35. Okay. You guys are pretty there. Kelly said 33, so probably you know the exact amount. Okay. So the number in the space of real estate, okay, and if you truly look at it, it should range about 15 to 20%, right? And this is, I'm talking about this is actual marketing to get leads. All right. I'm not talking about, hey, hey, CRM that you're using to control. No, I'm talking about like, hey, if you're doing online like Facebook, hey, you spent you made 100 grand, you spent 15 grand on that, right? Direct mail or Facebook. You made 200 grand, you spent 30 grand, right? That's the number that you're looking at. It's usually about 15 to 20%. Okay? So, yeah, I kind of figured that. I think Dustin said mix of actual products and tools. Yeah, because it's so high at 40% and 35. Unless you purposely did that, because like in my case, mine is that purposely high, but then I pay myself a salary through my corporation, and I purposely do that so my corporation doesn't quote unquote make necessarily profit, or I try to do as break even as possible. Right? So again, different strategies. So what you see on the screen here is based on that strategy you saw earlier, right? Where I showed you this, right? Points that I do that, because I have recurring expenses, everything I put on a credit card. All right, for my business. I run multiple businesses, so it ranges depending on if I'm doing a big media buy and stuff like that, but it can average out 30,000 plus. Okay, and it's a share overhead expense and anything that I can put on credit card. That's it. So when I do that, I was able to travel, and I went to go see my assistant in the Philippines not too long ago. And when I did that, it was a business trip, and guess what? My points covered it. And as well as when I was there, I checked out real estate for investment opportunities, as well as did some couple of charity work out there with the organization called JCI, and we went to go visit 9 schools in a day, this one right here at the top, this one was real rough for me to actually go, which was located in the city dump yard. And as as I was driving up, I saw people driving down the hill and they had their face covered. We had, AC on the car. And then when we finally got to the junkyard and we opened the door, I stepped out, and then this gust of smell just came. Now, the smell wasn't like trash smell. It was smell of ammonia. Right? So these kids right here that you see literally is standing on a hill of trash, because that's where all the city people dump, and ammonia is there. And I'm just like, wow. And then these kids have smile from year to year. Right? They don't know any better. They're just smiling. And then we gave out books and stuff like that. And it was one of the greatest experience I actually went through. And I said, man, if you're born in the States, that's your golden ticket. So really a humbling experience. So this one right here in the middle is I was checking out real estate in a place called New Valley. Another one right here is on the left. I know it's a weird one. It says magic trick with city council attorney of San Pedro. So this guy here on the right is an attorney for the city of San Pedro in the Philippines. And I was there meeting him, and he's actually here in the picture right here too. And I posted this. Why? Is because these are all what? Deduction, expenses, everything else. Okay. So I use this for tracking purposes, using online social media. All right. But one of the number one thing that I've learned is that don't let the tax strategy control the economics in your business. All right. Don't let the tax strategy control the economics in your business. Example is this. All right. Especially people that start making money in real estate, right? Which is the first thing that they try to do is go out and buy a new nice car. Especially in Los Angeles, I see that a lot. I don't know in your area if you see that or not, but, I see that, especially young people. Right now, I was one of those people, right? In 2006, I got like my new E350 on their push start car, right? And I thought I was super cool because I got that, right? And no one else ever had at that time a push start, So I was like, oh my gosh, and I got that. And the reason why I was convinced to do that is because my friends, at that time, all young people making great money, right? Were just like, hey, you should go get a car because you can deduct the mileage. Especially not only that, in my case, I didn't lease it, I bought it, which was, interesting enough. I paid a lot more for it, but that's what I did. Was it the good thing to do? No. Okay, because we know what happened after 2007 and 2008. The market crashed. All right? The market crashed. And luckily enough, I still have that car still, but I let the tax strategy control the economics in my business, which in reality, I should have looked at the economics in my business and says, oh, okay, some of my properties are sitting longer on the marketplace. What the heck, man? Maybe something's going on. Maybe I shouldn't overextend and I shouldn't try to expand as fast as possible. Okay, so that's my recommendation to you, all right? Now, here's another example of one of my clients. Now, for some of you guys and gals, my grizzled veterans, I know I've talked about this, so this shouldn't be a big surprise to you, okay? Some of the new folks might be like, holy smokes, okay? So these are the people that you're competing with on the space of online digital marketing. I don't know if you see this. It's kind of small right here, but this is literally year to date, okay? Online advertisement spend is $20 million. Right, $20 million. Now, this is a nationwide campaign, okay? Nationwide campaign, so it's not in a state, all right? But you can see here the amount of clicks, amount of impression, amount of conversions, amount of leads. All right, now, this particular person does lead generation for the space of what? Real estate professionals. All right? These are the people that you're fighting and competing against. Right? These are the people that you're never going to hear people saying, oh, yeah, hey, here's an actual course to learn about online lead generation. No. They're not going to tell you that because their livelihood depends on this. This is one of my good friends, and we mastermind all day long, and, this is what you're competing against. So if you wonder why the cost of online lead generation has gone up, cost per lead, especially in a metropolitan area, this is the reason why. Because more and more people are coming in to compete off of that. So it's becoming increasingly more competitive. Now, not to say that you can't win in your marketplace, but you definitely got to do something else different than everyone else. So when I hear people when it comes to online lead generation, right, just like taxes that we're talking about here, is that when people try to put them in a cookie cutter, one size fits all, this will absolutely work for your business type of guarantee, I say that's full of shit. Some fundamentals may work. So understand that. Because if you understand this side of the business, okay, the lead generation conversion side becomes really simple stuff. Okay? Kelly said, what state are they in? I'm not gonna say, but put it this way, they're nationwide. The only place that they're not doing it is in Alaska. Yeah. And you can probably guess which state based on the size of the state, right? If you use kind of the, hey, look at the state, you know how much they're doing. So yeah, and these are essentially literally lead vendors and stuff like that are paying for it, right? So yeah, this is a real screenshot. Look, there's no point in me making this stuff. Someone says, is that real? Yes. Yeah. Seeing is believing, ladies and gentlemen. Yes, people spend a lot of money on online leads. Okay? So here we go. Let's go and get deduction number 5. We've got to speed this up a little bit. Home office deduction. You may be eligible to deduct a portion of your home expenses related to your business through the home office deduction. However, there are a few things you need to know. Your home office needs to be used exclusively for business. This means your couch, exercise room, kitchen table don't count. Your home office needs to be fully dedicated workspace. Further, it needs to be used regularly for management and administration function. You can take it in 2 ways, simplified and regular. All right, so here's Annie Agent, an independent realtor who has a separate room in her home, which is 200 square feet, that she exclusively uses her brokerage business. She meets the requirement for the home office deduction and opts to take the simplified deduction. When Rachel prepares her tax return, she would deduct $1,000 for her home office on line 30 of her Schedule C. So for when it comes to home offices, you can't just use a kitchen table and then slap a laptop there and says, this is my home office. There's a lot of people who do that in the space of real estate. It cracks me up, right? They use that. And then they wonder down the road, hey, why are they getting slammed by our favorite uncle? Okay, so don't do that, right? Get a dedicated room. And to make it easier, what I learned is that beginning of the year, I actually take pictures of that room, and I keep it in a file. Right, so if ever I get audited or whatever, the idea behind it is you can show the picture versus actually having the auditor come to your house. Right? And this is all about discipline. I don't know if you hear a common thing, right? Tracking and discipline, tracking and discipline, tracking and discipline, right? Dustin said to get more of the deduction, you can deduct closet space and wall space to increase percentage of home use. Yes, that's 100% correct. Now I'm going to give you some other couple of stuff that you can do here on the home office deduction, okay? Is that why do I do some weird videos at my house when I do like video vlogs or whatever? Right? Some of my clients that I work with, they started doing video vlogs of their house, okay, and they talk about what's going on. Why? Is because now they're deducting off that. Because now people can claim and says, hey, look, this is part of the props. I'm using a percentage of this. All right? So now let's go into number 6, charitable deduction. All right, so hopefully you guys and gals are doing some charity work, okay, doing great things in this world. So again, the earlier one that you saw is I was out, delivering books to underprivileged kids in the Philippines. So I try to do stuff a lot of times outside of the country because the dollar stretches much further. But here it is. It says donating to charity is not only personally fulfilling, but also can save you money on your taxes if you itemize your deduction. Regardless if you donate personally or if you donate through your business, your charitable contribution will be reported on Schedule A of your 1040. Generally, charitable donations are limited to 50% of your AGI, adjusted gross income. Remember this, okay? This AGI, we're going to talk about a little bit more of this, what this all means. However, if you're donating capital gain property or donating to certain types of organization, your deduction may be limited to 30 to 20% of your AGI. Before you donate, check your link below to see if it's blah, blah, blah. So Annie Agent attends a charity golf tournament organized by her new clients. Her AGI is $70,000. Charity pays $400. She purchased $300 of raffle tickets during the event, assuming it was normally cost $200 for the tea time and food and drinks on the course, and he could deduct $200 on her Schedule A, and the deduction amount calculated by finding the excess of the charity fee over the market value of the item is $400 minus $200, okay? So the point is donate and do that, especially if you owe money. Okay, so now here's another one. This is a huge one, okay? Deduction number 7, self-employment tax, all right? So if your net earnings from your self-employment tax are $400 or more, which if you're in business, it's going to be a lot for you guys, don't forget that in addition to paying income taxes, the IRS requires that you also pay self-employment taxes, which is similar to Social Security and Medicare. All right. Now, I'm not going to read all this. You can read this on the replay, okay? But what I want you to focus on is in here, okay? Who's in here has an entity when they get paid? Or are you getting paid under your personal name? That's what I want to know. Who's using an entity? It can be a LLC. It can be a corporation. Okay. Let me know who has one, and then let me know how are you taxed currently on that as well, because this is going to be paid. Kelly says self-employed. Kelly, you definitely need to go set up a entity. All right, talk to your accountant on that. And I know this is going to sound very, very weird, but just remember that there's two types of taxation. The federal government does not recognize an LLC as a tax entity. Okay, so even with an LLC, because it's simple to use, because LLC is all created at the state level, it's how you're being taxed, and it can be taxed as a pass-through. Which is considered typically a S corporation, okay, or a C corp. All right, majority of the people probably in here, except maybe like Frank, okay, is going to fall under schedule. I'm sorry, not schedule. Is going to be under a pass-through, which is, hey, you're going to do an S corp as a taxation if you have an LLC. Kelly says, I'm confused. So set up an entity, get an LLC, okay, my recommendation, talk to your accountant about this, all right? And your accountant should be able to tell you this. If they can't tell you this, all right, then you should probably upgrade. You should probably do it now before you get it any closer to your next tax season, okay? It should be an S corp. That's my recommendation. Yeah. Now, when you start getting close to like the 2 comma club, as I like to call it, I recommend people start going into kind of the C corp and stuff. Okay. So, my company is a holding company that owns different companies. So, we have a structure as a C corp on ours, and we get paid a very, very, we get paid a salary through that. All right. So, let me know any questions on that. Because again, it's self-employment tax. If you do not have an entity, okay, you're paying at the highest level. I cannot stress that enough. I did that originally when I started in real estate in 2004. I was doing that without an entity, and yeah, I thought I was making good money, but I left a lot of money on the table because I was just an idiot. Okay, so another deduction 8, business entertainment. So building a relationship with the employees, contractor, vendors, advisors, competitors, right, is the key to being a successful entrepreneurs. So oftentimes entertainment is you can deduct it according to your qualifying entertainment expenses. This is the key one. Maybe 50%, or in some cases 100% deductible. So what does it all mean? Okay, so a lot of times people will be like, hey, I'm going to deduct some stuff on food and entertainment. I'm going to take out a client. I'm going to do this. I'm going to do that. And when it comes to entertainment, just remember, majority of the stuff, 80% of the stuff, it only qualifies to what? 50% deduction. All right, 50%. You only get 50%. All right, now, what are other ways that you can get around and get 100% on that? Okay, is being smart, is to go out and go get gift cards. All right, go out and go get gift cards. All right, go to Staples and go get a Visa gift card. All right, go to your post office and go get a gift card. Okay, and you can do that, and then technically it will fall under the category of 100%. Now, again, entertainment purposes only. Check with your accountant on that, and you can do that. Okay, so another one, deduction number 9 is convention, seminars, and trade shows. Right? Why do I, at the end of the year, always go to mastermind groups? Why do I join mastermind groups? Why do I go to these stuff? Because it's about deduction. I get to deduct all of that stuff. All right? Now, my recommendation, if you're in the space of real estate, okay, is I tell individuals to go to conventions and seminars and trade shows outside of real estate. For some odd reason, people only go to the ones that are real estate related. I don't know why. I say go to different ones. And when you do that, you're going to gain so much more benefits. Like if you want to learn about, online lead generation, one of the biggest one is the traffic and conversion summits, right? I've been going to that for years, all right? You want to do a wealth management one, you can go to another one, right? One of my earliest mentors and coaches was a guy named Dan Sullivan, the original 10X guy, all right? And paid tons of money. Right, because you get to meet other people outside of the space of real estate, and you can take that and then reapply it in your business, right? So another one is number 10 is education and training, deduction on this, all right? Please know that you can do that. So the training that you're going through here is all tax deductible. Okay. Now let me speed this up. Here's an interesting one: office rent. All right. So if you have to pay desk space, because of your split or your subleasing or whatever, just know that that's also deductible as well. Now, here is two types of train of thought for people that are in the growth phase of their real estate business, okay? If you're not a broker and things like that, okay? Is consider this as a possibility. All right, I have a client of mine who constantly was like saying, hey, Jeff, what should I do to negotiate a higher split with my broker? And I was just like, well, it all depends. I was just like, what is the broker providing you and what's going on? Okay, and then he starts breaking it up, and he was just like, yeah, they provide me a personal, because he's one of the top producers, right? So they give him an office, right, his own office line, and he doesn't pay anything for desk space. But his split was at what? 90. I'm sorry, his split was at 85, 85-15, and he's a top producer, right? Does well over 30 million in a year. Okay, so he gets paid a lot. So he was just like, yeah, I want to get a bump on this, and I was just like, okay, like, what are you going to bring to the table? And then he was just like, well, I'm just telling them I'm the top producer. And I said, hey, man, it might be better to take a different approach, which is saying, hey, you know what, you'll pay for your own desk fees and everything else out of your pocket, but just give me a 95 split. And he was just like, why would I do that? Why would I want to pay it out of my pocket? And I was just like, because of where your income is at, you need more deductions. So take it off of that, so you have that. And then when you jump that 10, that's an instantly over that you're going to get is more than what you're going to be paying in rent anyways. Right, so when we ran the number, it ended up being like he makes instantly on that move alone over like $50,000. Okay, so start thinking in that way, right? In that way, because splits are one thing, right? Where how you have it set up with your broker, but also at the same time you need deductions as you start making money. All right. Number 12 is member dues, right? So if you're part of professional organizations, so again, I'm part of multiple organizations locally as well that I'm part of, and I do that. Why? Is because that allows me to get my name out in the local marketplace, as well as, guess what? They're all deduction. Okay, so let me speed this up. Office expenses, right? All right, rent, furniture, all of that stuff. You can definitely do. Number 14, tax preparation fees, right? We talked about this. So again, if you're doing it yourself, highly recommend to hire someone, hire a professional to do that. Number 15 is state and local income taxes. Now, clearly, if you're in a state that does not have state income taxes, God bless you. So, because I'm in California, so we get taxed a lot. So, so we have that. Make sure to be aware of that. Number 16, this was an interesting one. 16 is self-employed health insurance deduction if you do that. So again, if you have health insurance, right, highly recommend, especially a family policy, convert that over to a high deductible health insurance policy and get something called an HSA or health savings account. And then that's kind of like a IRA, so you can get a dollar deduction off of that. Right, and especially if you're a young person, you need to stop this because I've, oh my gosh, I talked to one of my, he's making over 300 grand, okay, all right, but he doesn't have health insurance. I was just like, what the heck? Why don't you have that? And he was just like, well, one of my clients is a doctor, so if anything happens, I just pay cash with him, and he takes care of me at cost. And I was like, okay. But I was just like, did you know the fact that you don't have that, you have a penalty by the actual feds of the sheer fact that you don't have health insurance? He's like, I do. And it's like, yes, you do, buddy. And he's all like, I was hoping that your tax guy would have told you that. And he was just like, no. And he's like, who do you use? And he was like, a tax preparer. I'm like, so you don't use a real CPA? And he was just like, no. And I said, you need to change that immediately. How'd you find out about this person? He was just like, well, my whole office uses this person. And I'm just like, that's the problem. Your whole office uses tax preparer. Like, I'm like, come on, man. Like, it's not making like you're like run it as a business, So he started doing that, and he's doing that. So again, advice is for health insurance is to look at your policies, right? Get a higher deductible and get something called the HSA or health savings account. And then when you do that, not only will you save on the monthly cost of your health insurance, but also at the same time, as long as you're a healthy individual, you can, keep your money, rotating in your health savings account. Okay, who actually has a health savings account? Let me know. Say I in here. I do. Frank said I started 2 years ago when you told me. Yep, that's great. Tom said I will be starting now. Okay, that's good. And then for the other folks that didn't answer, I don't know where you're currently at, but again, you got to pay attention to this stuff. All right, so let me talk about something else, okay? Because we're getting at the end here. All right, how I cut my taxes. This is years ago, from $57,922 to $33,594, and kept the difference. Okay, so originally, what I kept it simple is when I started doing with taxes, right? Is I'll keep 30% of all the money that I would make. So if I get a, $10,000 check, I'll keep a $3,000 aside for taxes, right? If I get a $20,000 check, I'll keep $6,000 aside. If I make 100 grand on a rehab, I'll put $30,000 aside on taxes and stuff like that. And that's what I used to do, right? Very simple, right? Try to be as disciplined as possible. But then when I started realizing a lot of this stuff I started realizing that there are other ways to get deduction off of it. And I only discovered this once I had a badass CFP. I'm talking about certified financial planner, certified public accountant, and he has defended people from audits and stuff like that. Okay, so one of the top guys that I know, and came from a came from a referral from one of my good friends who runs a multi-million-dollar company in the space of YouTube, and he started giving me different strategies. Okay, and one of the easiest strategies that I figured out was something called a SEP IRA, or a qualified retirement account. Okay, so in here, who has paid taxes last year? Let me know, and let me know the amount if you're open to share that as well. All right, or maybe even this year, who's on? Who has paid? Okay, so Julie said 180K. Ben said pay taxes. I'm not exactly sure. So someone like you, Julie, did you put that away in a qualified retirement account to get deduction off that, or did you not? Hold on. Julie said nope. Hold on. Let me see here. Let me see if I can unmute you, Julie. Julie, are you there?
I'm here.
All right. So Julie, let me make sure I get the kind of the premise on this. So you paid 180K in taxes. Is that correct?
I received an invoice from them for like 87,000 or something like that. I've been negotiating it down, and I think I got it down to about 55. And what I did